Your tax refund just cost you $2,000. Not the refund itself, the fact that you got one at all. Because while you waited 9 months for the IRS to mail back your own money, that same cash sitting in your checking account would have killed the credit card balance charging you 18%. The average American gets $3,000 back at tax time and treats it like a windfall. It's not. It's your paycheck from last April that you let the government borrow for free while Capital One charged you 52 cents a day. Here's what actually happened. Every paycheck last year, your employer withheld taxes based on a form you filled out once and forgot about. That form, the W-4, tells them how much to grab. Most people set it conservatively because nobody wants to owe money in April. Sounds smart. But conservative withholding means you overpay by hundreds of dollars every single month. That's hundreds of dollars that could have paid down your Discover card at 23% APR. Instead, it sat in a Treasury account earning you zero while your debt compounded daily. Let's use real numbers because this is where it gets concrete. Say you got a $3,500 refund last April. That money was yours in 12 chunks, about $290 per paycheck that your employer sent to the IRS instead of you. Now say you carried a $4,000 credit card balance all year at 18%. If you'd taken that $290 per month and thrown it at the card, you would have saved $760 in interest over those 12 months. You didn't. You got your $3,500 back and probably bought a couch. The IRS paid you $0 to hold your cash. You paid your credit card company $760 to borrow money you already earned. That's the actual cost of a refund when you're carrying debt. Not just zero return, negative return. You're paying interest to borrow your own money back from the government. Now here's the part that should genuinely bother you. The IRS processes 90 million refunds a year. Average refund is $3,050. That's $274 billion in free loans from taxpayers to the Treasury. The government knows most people overwithhold. They also know 71% of tax filers get refunds, which means 71% of people are structuring their withholding to give the government extra. There's no enforcement mechanism making you do this. You're doing it voluntarily because it feels safer. But safe from what? The penalty for underpaying your taxes is tiny if you're a regular W-2 employee. If you owe less than $1,000 in April, there's no penalty at all. If you owe more but you paid at least 90% of what you owed through withholding, the penalty is about 0.5% per month on the underpayment. That's 6% annualized. Your credit card is charging 18 to 29. The IRS is literally a cheaper lender than Visa, and you're choosing Visa. Why do people do this? 2 reasons, and both of them cost you. First, forced savings. People say they can't save money, so they overwithhold and treat the refund like a windfall they can finally use for something big. Vacation, new tires, paying off a chunk of that credit card. This logic treats you like a child who can't be trusted with your own paycheck. Which might feel true, but the cost is enormous. That $3,000 refund could have been $250 per month in your account. $250 a month pays minimums on 3 credit cards. It funds a Roth IRA at $21 per paycheck. It builds an emergency fund so the next car repair doesn't go on the Discover card at 24%. Instead, you got $0 for 12 months and a check in April. Second reason, people are terrified of owing. Owing feels like failure. Getting a refund feels like winning. The IRS has accidentally trained you to prefer getting your own money back over keeping it in the first place. This is insane. You earned that money in June. The IRS didn't give you a gift in April. Here's the thing nobody explains about withholding. Your W-4 isn't set in stone. You can change it literally whenever you want. You fill out a new one, give it to payroll, and your next paycheck withholds less. The IRS doesn't need to approve it. Your employer doesn't investigate whether you're doing it right. You just decide how much you want withheld, and that's what happens. Most people filled theirs out on their first day at a job 6 years ago and never touched it again. The W-4 got redesigned in 2020 to be less confusing, which somehow made it more confusing. It asks about dependents and other income and deductions, and if you just skip all of it and write 0 everywhere, you get the standard withholding for a single person with no kids. That standard amount is conservative. It assumes you have no deductions, no credits, nothing that would lower your bill. For most people, That means overpaying. Here's what happens if you adjust it. Say you're single, no kids, one job, and you got a $2,400 refund last year. That's $200 a month you overpaid. You can go into your W-4 and claim roughly one additional withholding allowance. The form calls it something else now, but the concept is the same. And your paycheck goes up by about $200 a month. That's it. You file your taxes next April, and you get a $300 refund instead of $2,400. You didn't commit tax fraud. You didn't underpay. You just stopped overpaying. Now let's say you do this, and you actually use that $200 a month correctly. You've got a credit card at 19% with a $6,000 balance. Minimum payment is $120. You've been paying minimums for 2 years, and the balance barely moves because $100 of that payment is interest. You adjust your W-4, your paycheck goes up $200, you put that straight onto the card. That's $320 a month total. At that rate, you pay off the card in 21 months instead of never, and you save $4,200 in interest. The refund you gave up was worth $2,400. You just gained $1,800 by keeping your own money. That's the actual math, not theoretical. That's how compound interest works when you stop feeding it. But here's the genuinely uncomfortable part. Most people won't do this. Even hearing the math, even seeing the numbers, they'll keep overwithholding because the refund feels good and the paycheck adjustment feels risky. The refund is a lump sum you can see. The paycheck increase is $200 that disappears into your account with everything else. It doesn't feel like a raise. It feels like $200 extra you'll waste on DoorDash. And maybe you will. That's the real fear. That you can't be trusted to deploy your own money better than the IRS can hold it for you. But the IRS isn't holding it safely in an account with your name on it. They're spending it. They're funding operations with your withholding all year, and in April they settle up. It's a free loan to the government. If you're going to give someone a free loan, it should at least be yourself. Here's what changes if you actually do this. You adjust your W-4 today. Next paycheck is higher. You open a separate checking account, takes 4 minutes, and you set up auto transfer for that extra amount the day your paycheck hits. That account has one job: hold your unrefund until you deploy it. Could be debt payoff. Could be an actual emergency fund so the next surprise doesn't ruin you. Could be a Roth IRA contribution, which at your age is worth about 4 times the contribution by the time you're 67. The point is, you're now deciding what your money does, in real time, instead of waiting for the government to mail it back. The pushback here is always, but what if I owe? What if I mess up the W-4 and I owe $2,000 in April and I don't have it? Fair. Here's the answer. If you adjust your withholding and you're genuinely unsure, set aside half the monthly increase. So, if your paycheck goes up $200, put $100 in that separate account and don't touch it. Come April, if you owe, you've got $1,200 sitting there. If you don't owe, that's $1,200 you saved without thinking about it. Either way, you kept the other $100 every month to use in real time. This isn't about perfect optimization. You don't need to withhold so precisely that you owe 0 and get 0 back. That's impossible and pointless. This is about not overpaying by $3,000 while you carry $5,000 in credit card debt at 22%. That specific situation is financial self-harm. The IRS doesn't care if you overwithhold. They'll take the free loan. Your credit card company doesn't care either. They'll happily charge you 18% on the money you already earned. The only person who can stop this is you, and it requires filling out one form and trusting yourself with $200 extra a month. Here's the actual test of whether this matters. Take your refund from last year. Multiply it by 0.18. That's what it cost you if you carried an average credit card balance at 18% for the year while you waited for that refund. If that number makes you angry, change your W-4. If it doesn't, you're either debt-free or you've made peace with paying interest on your own money. Most people are neither. One more thing. If you're thinking, I'll just keep the refund system, I like the forced savings, I'll use the refund to pay off the card in April. You're not wrong, that's better than spending it. But you just paid a full year of interest to do what you could have done monthly. A $3,000 payment in April after paying 18% all year saves you less than 12 payments of $250 starting in month 1. The math doesn't care about your feelings. Earlier, money beats later money when debt is involved. So here's what you do. Pull up your last pay stub. Find the year-to-date withholding number. Divide it by however many paychecks you've gotten. That's your current monthly withholding. Now pull up last year's tax return. Look at line 24. That's your total tax. Divide by 12. That's what you actually owe per month. If the first number is way bigger than the second, you're overpaying. Adjust the W-4. Keep the difference. Put it to work. That's the whole system. Your tax refund isn't the government being generous. It's your own paycheck on a 9-month delay, earning you nothing, while your debt costs you everything. If this made you mad enough to actually change your withholding, subscribe so you don't miss the next thing your bank isn't telling you.